What's good, people, traders, and dedicated gold chasers? Welcome back to another modern day trader review with your boy Marcy, and we're back with another one. I wanted to say thank you for all the love that you guys have been showing. But anyway, let's jump straight into the shits, bro. This week is another week following up on last week where we got another 100% win rate. No shit. 100% win rate, guys. 100%. And this week, I'm going to hook you guys through something a little different. I want you guys to sit through until the end to see the result. But what I did was I did my live analysis, hooked you guys through my thought processes from where I wanted to initially take the trade to where my analysis shifted to potentially breaking out to then shifting to this could potentially be a fake out or a liquidity grab. And it was interesting walking through it real time with you guys. It was really interesting, and then taking you guys through the result and how it actually played out. That is something that I'm quite keen on, and I'm quite keen on you guys seeing. So watch until the end to see the result of the trade and how the analysis actually played out, and take notes on how I actually walk myself through the analysis throughout the 4H candle, and the shift of mindset and just adapting to what the markets could potentially do to capitalize on what could potentially happen and what happened. And this is a way in which you can just capitalize and execute on what I think is really good analysis and what I think is great bias setting for a particular session. So enjoy this, guys.
I wanted to record my analysis before trading. Now, before this session, we're currently around 11 o'clock right now. Before this 4H close, I wasn't trading due to the fact that nothing aligned. But anyway, let's jump straight into the analysis. So what you can see from a daily time frame, as I mentioned over the weekend, this was my initial point of interest that I look for bounce off from, right? But now what you can see is that we are in a high value area from a daily time frame. And so just making mention of these areas right here, and just this whole area in general is just a high value area from a point of view where we can bounce on the lower time frames. So generally we know that we look at the previous day candle in order to determine the next day's direction. However, when we come into high value areas, you need to understand the dynamics of the market and how the market shifts and how the market plays around at these high areas. There's a high chance that we could potentially bounce off from it and then continue, or there's a high chance that we could pull to the downside. But the good thing is that you can take advantage of lower time frame movements and like start to see what could potentially happen. So when you jump down onto the 4H time frame, so initially you're looking for buys. What do you see in London session or London open around the 7 o'clock candle? You saw that it was bullish. However, this candle never broke above 15-minute highs, so we couldn't really take any entries. We broke the low, and that to me was then a potential signal that price action is going to go down. So the only way I can really take trades today is if we have 4H correlation, because the daily is bullish, right? So now when you're taking a look at the previous candle, which is a 7 o'clock open and the 11 o'clock close, you can see it's bearish, it closed bearish. So in the next session, I could anticipate potential bearish moves, but the only way I can have higher time frame on my side is if I have the 4H correlation across pairs. So what you can now see is if I go through the pairs, you can see pound USD is bullish, whereas GJ is bearish. So we have that mixture of sentiment, like sentiment is not clear with pound, and that happens sometimes. But what you do then is you go through your other end of your pair, which is now yen, and let's see what yen is saying. So euro JPY pretty bearish, so that, or sorry, a strong yen, potential to push to the downside. CAD JPY, bearish candle, similar thing. So then we have a strong yen, potential for price action to push all the way to these areas here from a 4H perspective. USD JPY, similar. So we have a very strong yen across the board, as you can see. So now jumping down onto lower time frames, what we know is that price action bounced off from these areas from the top, right? What I had marked was these 4H candle, these 4H points of interest. And the only reason I had it marked is because price action had this big push to the downside. Now, did we break structure? I think you really nitpick in structure if you're looking at things in and around these areas and these pullbacks, and then you're looking at these pullbacks. But what I can say is that I like the way price action took roughly like 3 days to get back into these areas, whereas this push took a day or two. And you can see it's very impulsive. It actually happened over 12 hours, very impulsive in nature, where this correction is very, very corrective in nature and very slow in movement. So what that means is that there's a high chance that once we mitigate orders up here, that we could potentially push to the downside. And now what we're getting is we have the 4H correlation, which are signs of potential bearish moves. Jumping onto the 15-minute, how do we analyze this? We come onto the 15-minute and you start taking note of structure on the 15-minute. You really just basically you draw the high where it was previously broken. What you can see, that was the previous high. We had a break above there. What formed this higher high? That was this higher low. So now you draw this higher low and you can clearly see, well, you can't clearly see, but this low came in at 196,760, and then the closure of this candle is actually 196,758, meaning that we actually had a break of structure around these areas. And what that means is that price action had formed its first low there, then pulled back to form a lower high, to form a lower low, lower high, lower low. And so really what you have now is price action breaking structure here to form those new lower lows, and then potentially taking a point of interest or double top trade out of that point of interest, and then potentially taking breakouts from these areas right here. So my breakout trade would be taken on a 15-minute break and close below 196,300. Let me set my alert. So if I add an alert right here, 300, let's say 300. So that's my alert, and then let me add an alert in around these areas. Now I won't just get into a trade based on the fact that it actually hits the alert. I need a physical close in my direction, which is bearish, right? If my direction is bearish, then I need a 15-minute candle closure below these areas, and then I need price action to come deep into this area without breaking it, or breaking and closing above. Then I can get a 15-minute close, and then I can then clearly state that price action is going to go to the downside, and I can take potential trades out of there, or I can take potential trades out of the breakout. And all I'll be doing is, once the breakout occurs, I'll be jumping onto the 1-minute time frame to see where structure shifted, and then where my new lower high in the downtrend is. So what you can see is that this previous lower high created that lower low, which is below these lower lows. So that means structure on the 1-minute shifted right there. We then formed a higher low, we then formed a higher high. So that means right now on the 1-minute time frame, we are forming higher lows and higher highs until we break below these areas right here on the 1-minute time frame. If price action breaks below that area, then I can confidently then say that price action is gonna somewhat do something like this. Let's say we get a break below, we get that, which would be the formation of the 15-minute wick. We get the formation of the 15-minute wick. I then set my sell stops below these areas right here, or below the wicks, and then anticipate the price action is just going to continue to the downside, forming a trend on the 1-minute. I'll keep you guys posted with this trade, but that is my analysis right now. So to sum it up, if I go back to the 15-minute time frame, just to sum it up, all I'm looking for is for a pullback into the 600 area. So I'm looking for a pullback into these areas potentially, waiting for price action to bounce off from these areas and then close on the 15-minute, close bearish, and then I can potentially take a double top. Or I'm waiting for a break below the 196,300 area, break and close below that before I then jump onto the 1 minute to look at structure and anticipate continuations to the downside. And that's ultimately all that I'm looking for. I have my alert set and we'll see what exactly happens when it happens. I'll try and record the whole process of the trade. Okay, so I just gotten an alert that it has broken structure on the 1 minute time frame after price action has effectively came into the point of interest. Now, what do we do in this case? We jump onto the 1 minute and we make sure we got a break and close below structure. So as you can see, I marked out structure right here, and the reason why this is structure and not this up here is simply because we have multiple yellow candles or multiple bearish candles in this pause in the market before a big push to the upside. And so that big push to the upside was a result of a new higher high, and that higher high then broke structure right there, and then we mark this as a break of structure and then put that, and there we go. So now we have the break of structure on the 1 minute time frame. What can we now anticipate and expect? All we need to do now is wait for the next 15-minute candle to close, unless this candle closes bearish from this level in the next 3 minutes, which I highly doubt. I highly doubt that will happen. But when the next candle closes bearish in our direction, we can start anticipating that price action will then push to the downside. All we need at this minute or this moment is a 15-minute candle closure in our direction. So guys, we're back. As you guys can see, price action has actually come up into this level, and I think we broke above structure. However, what you can see is that we have this close right above structure. Now there is potential that this is just a break and retest after we broke out, retest to potentially continue right on the 15-minute time frame. However, how would we know that it's not a retest and it could be a potential liquidity grab, or what some people call a fake out? The only way we really know that is if you start jumping down onto the 1 minute time frame, and this is why 1 minute time frame structure is so important. What you can see is that initially when I made the previous section of this video, we were in and around here, we broke these lows and then we broke the highs, right? And unfortunately price action closed bullish pretty much on the 15-minute, pushing to the upside, and subsequently we made these higher highs, higher lows. Now what you can see since is that we had a 15-minute bearish close. Yes, it's above structure and it's above the previous point where price action on the 15-minute has hit a significant level, and you anticipate that price action should hold that level. But what happens when price action breaks out and then breaks back inside? That should then be a liquidity grab or some type of fake out of sorts, right? Now the only way you can really see this is by keeping an eye on structure. Now what do we need now in order to enter a sell trade? Because our bias is bearish. We need a 1 minute break and close below these areas, and after that 1 minute break and close below these areas, we need a confirmation from a 15-minute candle closure back bearish. And once that happens, we can then start to anticipate and start to look for entries on potential trades. So all we're looking for is for price action to break below these areas. Now if price action is going to continue and break above this highs here that it created at 196,750, if price action on the 1 minute breaks and continues above that area, I'm writing these sells off completely, because then that means more likely than not what happened was that we had a 15-minute break and close above a significant level, we had a retest, and that's then the continuation. Now to me, as long as we are in this trading range between 196,625 and 196,750, as long as we're in and around these areas and we can potentially break to the downside on the 1 minute time frame, shifting structure back bearish, then add confluence with the 15-minute break, which you could potentially see right now with a 1 minute break and close below. Hopefully we can see it soon. You add the confluence of a 15-minute closure bearish, then you can start anticipating the price action is going to continue to the downside. So we'll see how this plays out, and we'll come back if we do get a potential entry, or if we can potentially see those particular checkpoints that I'm looking for, or particular criteria that I'm looking for, get met in the market before entering a trade. So you guys have seen the live analysis that I did. So I wanted to walk you guys through what happened after the live analysis. So I think where it stopped, or where I stopped recording, was after this fake out, and I anticipated that once the 15-minute would break back inside with a break of structure on the 1 minute time frame, that we could then continue. Now, if I go to the before picture, what you can see is that the break of structure was in these areas right here, and the break of structure occurred with this 15-minute close. And once that happened, all I did was I waited for price action to create this level, and that just occurred at the close of the 15-minute. And when price action created that level, I went ahead and set my sell stop at 196,570, and price action triggered me in, had a mini correction before impulsively moving to the downside. Now my stop loss was placed strategically above these higher lows, or these anticipated higher lows, that once price action breaks these lower highs, once price action broke these lower lows, then this becomes my protected high, and price action should stay below here and continue to the downside. Now bear in mind that I recorded this whole thing and my screen was on a different screen, unfortunately, and you just didn't see my reaction, or you just about missed my reaction. And that was the one time that I got to really record myself live trading. It's pretty much unfortunate that that happened, but it's part of the game, I guess. And yeah, that was my only trade for the week. Pretty clean, pretty simple. We had a bearish day. I was just anticipating that when price action pulls back into points of interest, even though we broke above structure, in theory we broke the 15-minute structure, this then ended up being a liquidity grab. And as I explained, the only way you know it is a liquidity grab or a fake out is if price action on the 1 minute starts to break structures to the downside and starts breaking lower lows and starts forming lower lows and lower highs to the downside. You can then start to anticipate and take advantage of those movements to the downside. Now, as I mentioned, that's the after picture. Let me show you guys the before picture. So this is the before picture. Pretty clean, pretty simple. As I mentioned, we had the break of structure, lower low, lower high being formed, and all I'm doing is I'm anticipating that price action is going to continue. And what happened? Price action continued and ran my TP right down. Now in theory I could have gone for more, just my plan does not allow me to go for more when I am only trading either the daily and the 4H in and of itself, or 4H correlation, which was this trade. So you guys can see that was a 4H correlation, a double top, double bottom, or double top on the 15-minute. And yeah, and so let me just filter for the month of May. Filtering for the month of May, what you guys can see is that we have 100% win rate, and that's just the way to do analysis, to stay on 100% win rate. And it's a way to really anticipate what the market's going to do and take advantage of the momentum when the momentum steps into the market. And just having those confirmations on your side makes sense, in that you allow yourself time, and you allow the market to develop in a way where it will show you what it wants and what it wants to do. So we only took this one trade for the week, and we're up 3R for the month. Happy days, happy days. So yeah, guys, I'm looking forward to moving with this new trading plan that I have, and with the tweaks that I made. It's really looking clean at the moment. We still have 17 trades left, or about, I think, 19 trades left for the next sample size, 19 trades. And so I'm really looking forward to the next 19 trades, just based on the work that I've put in and based on everything that I've done to get to this point. So guys, don't forget, that even in tough times, there's still results coming out of the tough times. And the good thing about results in trading is that it gives you information and data that you can take in and you can perceive it from a hindsight perspective. And then you can start making those adjustments to your trading plan to then get to a point where you're more confident and more comfortable to take a position that will allow you to move forward in the markets and in any conditions. For that sake, as long as you continue trading and continue executing your plan, you should be good. And so from your boy Marcy at the Modern Day Trader, if you like this content, if you like the live analysis and the live videos, I don't know how often I'd be able to give it to you, but what I can say, if you like the content from myself and Sam, don't forget to hit the like button and comment down below what you guys want to see from our process, growing as traders, and growing as people too. Just comment down below what you want from us. And until next time, don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. From your boy Marcy at the Modern Day Trader. Peace out.